Loans can bail you out during an emergency, and if you manage your finances well, they don't have to be a burden over a period of time. In fact, you can even get tax benefits from certain loans. As per the Income Tax Act 1961, certain tax benefits that have been provided to reduce the burden of tax repayment on borrowers. Hey guys, this is Simran from ClearTax, and today we'll be looking at some common loan options that offer tax benefits. But before we begin, do not forget to press the bell icon and like, share and subscribe to our YouTube channel for more updates. So let's begin. It's no-brainer that a home loan can help both self-employed and salaried individuals fulfill their dreams of owning a house. But did you know that the loan can potentially lower your tax liability? Yes, it can. The tax stops offered by the government can lessen the financial burden considerably for home buyers. The Income Tax Act of India allows exemptions on both the interest and principal component. The first one is Section 80C. Borrowers can claim a tax rebate of up to Rs 1.5 lakh on the repayment of principal amount under Section 80C of the IT Act 1961. However, to claim this deduction, the house has to be held for 5 years or more. For joint home loans, both the borrowers can claim a deduction of up to Rs 1.5 lakh each. The second one is Section 24B. A deduction of Rs 2 lakh can be availed under Section 24B on the annual interest of the EMI paid. For joint home loan borrowers, both the parties can claim deductions of Rs 2 lakh each. The third one is Section 80EEE. This section pertains to first-time home buyers. To claim deductions under Section 80EE, home buyers have two options. Option 1. Home buyers are entitled to an additional tax deduction of up to Rs 50,000 under Section 80EE, provided the loan taken is not above Rs 35 lakh and the cost of the property doesn't surpass Rs 50 lakh. Option 2. Home buyers can claim deductions up to Rs 1,50,000 for homes sanctioned on or after 1st April 2019 under Section 80EEA. The value of the house should not be more than Rs 45 lakh and the taxpayer should not have claimed deductions under Section 80EE. The fourth one is Credit Linked Subsidy Scheme, also known as CLSS. Under the Pradhan Mantri Awas Yojana, first-time home buyers can avail a tax subsidy of up to Rs 2.67 lakhs. Higher studies, whether pursued within the country or overseas, is a big expense these days. An education loan taken from an authorized establishment comes in handy when facing a cash crunch. It can be utilized to pay for tuition fees, books, accommodation, travel, study material, and other academic related expenses. And the best part, you can claim an exemption under Section 80E of the Income Tax Act 1961. Education loans pave the way to your future, but to be eligible for tax benefits on an education loan, the loan should be availed from a scheduled bank or a notified financial institution. An education loan can also be availed for self, spouse, or children. The legal guardian of any student can also avail this loan. This way, parents or spouses can also claim a deduction for payment of interest. First, only the interest component of the loan is eligible for a tax deduction and not the principal amount. Second, this deduction is apart from the deductions that an individual can claim under Section 80C of up to Rs 1.5 lakh for the tuition fees paid. Third, tax benefits on education loan can be availed for a maximum of 8 years. Fourth, lenders provide borrowers a moratorium period of 1 year to start paying off the loan. A personal loan is a type of unsecured loan offered for a plethora of requirements. Unlike other types of loans, a personal loan is an open-ended loan. It's not important for the borrower to state the purpose of taking the loan. Compared to other types of loans, a personal loan is a lot easier to obtain. We all know that personal loans are perfect for bailing you out from a tight financial spot. Being unsecured, they are easily accessible but a tad expensive because lenders tend to levy steep interest rates. Since a personal loan is not considered as a part of your income, many may wonder whether you can claim a tax rebate on it. The personal loan tax benefit depends on their end use. Tax deductions are applicable when personal loans are taken for specific purposes like education, purchase or renovation of your house, business expansion, etc. First, if the personal loan amount is taken for paying the down payment of a house or for renovation, tax deductions can be claimed on the interest paid under Section 24B of the Income Tax Act. Second, when the borrowed money is used for a business purpose or the purchase of an asset, the interest paid enhances the cost of acquisition. This lowers the capital gains, which in turn reduces the tax liability. As you can see, the aforesaid three loans not only inject cash flow when encountering a financial slump, but also provide tax relief. However, it's important to bear in mind that acquisition of a loan, no matter what kind, is a serious commitment and should not be taken lightly. After all, it's borrowed money that has to be repaid. Well, this was it for today's video. Let us know what you think about the video and comment below if you have any doubts. We will try to reply to it as soon as we can. Stay tuned to our channel for more informative videos like these. Till then, goodbye and take care.